All right, let's get started here. I want to make sure that we use everyone's time effectively, and there is a lot to cover here. Good afternoon, everyone. My name is Aaron Hamilton. I am the chair of IdentityNORTH, and I want to welcome you to this, our 6th IdentityNORTH webinar. IdentityNORTH has the mandate to educate and connect, showcase innovative leaders in the digital identity, privacy, and emerging online world. And I'm excited to introduce today's webinar because, this is definitely an innovative leader and someone that I'm really excited to talk to about a topic that is going to be really important in our life. Our topic today is around secure remote commerce, or SRC. This is a topic, those of you that know me, this is a topic that is near and dear to my heart. I do a lot of work in the retail and work with a lot of retailers across North America. The fact is that most retail commerce still takes place in physical stores, but most of the growth is taking place online. Furthermore, there is a ton of commerce that we might get into today that lies outside the individual people buying individual things for their lives. And don't even get me started about the implications of IoT. The Internet of Things, and when our fridges are smart enough to talk to each other and talk to the internet about our needs and order things for us, there are a ton of ways that our lives are going to change. And figuring out how to manage the relationships between humans and our appliances is going to be a monumental task that realistically we probably need to start tackling right now. So this is a really awesome topic. Secure remote commerce and the future of e-com identity and payments is something that I'm super excited to dive into. And I'm really happy with the guest that we have here today to walk us through what this is. And it's important not just in the digital identity space, but in our lives. So I'd like to introduce our panelists. Steve Blitzen is a solutions architect at Intersect. Steve has been a software security champion for well over a decade and has a strong focus on coming up with solutions and problem solving. And he leads the technical sales arm of Intersect here in North America. But they're actually an international software development company. They work all over the world, and they're a leader in authentication, app security, and payments enabling technology. And I couldn't think of a better person to kind of dive into this with. So we're going to talk for about 45 minutes, Steve and I, mostly him, followed by a Q&A session. So you can please use the Q&A button at the top of your screen, or I guess, sorry, the bottom of your screen, to register questions that you might have, and or just give us your name, what have you, and give us a sense of what you want to talk about or ask Steve about, and then Steve can take us through those questions. So without any further ado, I will hand it over to Steve. Take it away, Steve.
Hi, good afternoon. Thank you very much for that introduction. My name is Steve Blitzen. I'm very glad to be here with IdentityNORTH, talking today about a very hot topic, which is EMVCo, Secure Remote Commerce, or SRC. We want to talk specifically about the future of e-commerce, not just the payment side of it, but also the identity. What is it going to look like as the specification gets adopted and rolled out into the real world? Before I get too deep into this, introduce myself. My name is Steve Blitzen. I'm head up the technical sales here at Intersect, working very closely with Christian Alley, who I'm sure a lot of you, if not most of you, know. He's kind of a familiar face in Canadian payments, been doing it for a long time. And our company, Intersect, we provide financial institutions with new digital experiences that reduce fraud and increase customer engagement. And that's across a wide portfolio of products. So just to name a few, we have products like a 3D secure access control server. We also do things around security, authentication, and identity on the mobile and the website. But really what we're here to talk about today is secure remote commerce, right? What is it? And why did it become created? What problems are we solving with SRC? Why did EMVCo create it? And how does it work? Also, who is involved in this? So what is the ecosystem for SRC? Who are the participants? What roles do they play? And how might they be filled by real-world vendors and entities in the market existing today? I want to talk about also the end-user experience. After all, this is about secure remote commerce. The end consumer is going to be involved in this in some capacity, for sure. and we'll have some time for Q&A there at the end. So without further ado, what is secure remote commerce? I think I've heard that more times than I can count at various payments conferences and identity conferences, because I'd be lying if I said it's not a complex topic, but let's see if we can distill it down. So it is an EMVCo standard that was created for card-not-present transactions in the e-commerce space, and it's designed to provide secure and interoperable card acceptance through a standard technical framework and specification, right? It wants to enable a merchant to securely request and receive payment data that is used to process cards in a remote commerce transaction. It seems straightforward enough, but I think some of you in the audience might be going, well, hang on a second, EMVCo standard for card not present, isn't that just 3D secure? Get a lot of questions and confusion around this, so I want to clarify this up front. 3D Secure addresses a different identity and a different type of authentication. That is, 3D Secure is all about cardholder authentication. SRC is all about the consumer. You can think of it as the next generation of technology that indeed incorporates tech such as 3D Secure, but it takes it a step further and begins to orchestrate these disassociated systems that today kind of have proprietary information and interfaces where exchanging data can be relatively different. So EMVCo is striving to really standardize those interfaces so you can exchange data securely among them and make better decisions. So why? What does that mean? So at the end of the day, if you don't take away anything else from this, I want you to remember that SRC is a checkout experience. At its core, that is what it does. There's a lot of moving parts. It's very complex, but it is all about a checkout experience. Keep that in mind as we go through the presentation. As part of that checkout experience, we're going to bring something to the end consumer, and that's going to be convenience and a sense of security. Convenience in that we're going to minimize the amount of times that I enter my payment card credentials into a merchant, whether it's a card on file where I'm entering it into a merchant I have a relationship with, and that's just the card I'm going to use from now on, whether it's a guest checkout at a merchant that I have no relationship with, if it's just a one-time payment and I don't want you necessarily to, at the merchant level, store my payment credentials. We can address a lot of these problems, and we can do it in a way that is fairly frictionless and an overall better experience for the consumer. It's going to give me access to, essentially, you can think of it as universal wallets. So I've got my card in a number of different places. I don't want to have to keep putting it in over and over again, and maybe merchant A takes wallet A and merchant B doesn't. It's not a good experience, so let's unify that through standard specifications and interfaces. When you do that, you're also going to enable reduction of fraud because you're getting more information shared among all of the constituent participants. That's going to allow you to make better fraud decisions. It's going to allow you actually to reduce the amount of false declines that you get from something you may have thought was fraudulent activity as a merchant. Actually, it's legitimate activity, and you just didn't have enough information. And of course, the opposite is also true, right? If you can identify a fraudster with the more information, it's a win-win. Then at the core of that, it's really this mechanism to get the merchant data. The merchant is sort of really the benefactor and the key to all of this, because at the end of the day, again, it's a checkout experience. When SRC is completed, the merchant's going to get a payload back with a lot of data about that transaction. We'll talk a little bit more about that as we go on. So in order for this to get off the ground, you're going to need a large ecosystem of participants, and they're going to have some defined roles. Now, EMVCo does not make products. They make specifications, they make frameworks. They are not in a position to go out and say, Visa, thou shalt do this. It just doesn't work that way, right? So while the actual roles and the responsibilities of those roles within the ecosystem are well defined in the spec, who then is going to take that up remains to be seen. So we'll explore a little bit about who might be best poised to fill some of those roles and what those roles are as we go through. One of the key points that I think that gets lost a lot of times is that SRC doesn't pigeonhole a merchant into a specific experience. It doesn't reduce the amount of options that a merchant has, but I think it actually expands the amount of options that a merchant has, because again, the spec, it's defined, but it's not entirely prescriptive. There's a lot of coulds, could nots, maybes that is up to the merchant and the players to negotiate and establish how it's going to work. And the system at its core is API based with an optional SDK that you can embed to get the sort of stock SRC experience if you would like, which is on one end of the spectrum. Of course, you don't have to take the SDK. You can just use the APIs to keep your existing merchant experience look and feel and still participate in SRC. Now, I've put this diagram here at the bottom just for illustration purposes, because SRC fits squarely in the bucket in the left. It doesn't mess with any of the authorization and payments systems. So again, the merchant initiates an SRC, well, the consumer initiates really, but it's coming from the merchant. They go through the SRC process and they get that payload back, right? And it's then up to the merchant to do something with that payload. And that payload is going to invariably contain either a PAN, right, a payment account number from a card, or it's going to contain a token from a tokenized card. But it's also going to contain a lot of other information. But the point here is we're not changing anything else about this whole payments experience other than the checkout. And that leads us into, okay, so what aren't we doing, right? So all of your settlement stays the same. All of your authorization stays the same, right? We don't want to force the merchant into a specific checkout flow. And this actually has a lot of benefits because it is sort of kind of gray, right? If I'm a brand new merchant to e-commerce, I might not have any sort of checkout experience. I might have to cook one up on my own. And that can be a scary thing for a merchant. It can also be a scary thing for a consumer. If that checkout experience isn't designed properly, if maybe it was coded kind of shoddily, if it doesn't look legitimate, me as a consumer, I'm probably going to be pretty hesitant to put my payment credentials into the system. I'm going to go to a bigger box reputable retailer and do my transaction there and get the same goods just because I don't trust it, right? So in that scenario, you'll be able to have a well-defined, packaged SRC checkout experience, and it's going to be a sort of semi-universal experience. So any of the merchants that take that vanilla, it shouldn't be a surprise to a consumer when they see that again. Like, oh, I've seen this before. This is a secure remote commerce checkout. It's got the SRC icon on it. I can trust this. I know this merchant is legitimate and that the information in the system is going to be secured. On the other side of the spectrum, you've got big box retailers who don't really have any need to change their checkout experiences from a consumer's perspective. While they will be using SRC and they'll get the benefits of SRC, the look and the feel, not something that they're going to want to change, right? So Canadian Tire, they've been doing this for forever. They aren't going to introduce a brand new, totally different system to the consumer. And I go, what is this? I don't know what this is. So there's obviously a large amount of gray area in between. So the merchant experience, while it is again defined, it's not mandatory. Those flows aren't forced. You don't have to do it in a particular specific way. Again, the other thing that EMVCo is not doing here is defining specific entities to fulfill participant roles. So how this shakes out in the real world kind of remains to be seen. There might be a single vendor that takes a single role, but I think what you'll probably see, if I had to guess, in my opinion, some of the larger payments vendors who are in a position to step in and fill these roles will probably offer a broad spectrum of different roles to the market. So you have large companies like FIS who have an acquiring side, an issuing side, a large breadth of portfolio. They're in a pretty unique position to offer these services. But again, it's not prescribed. It's also not mandatory. So if you don't want to use that vendor, there's probably going to be 5, 10, 15 other vendors that you can choose from, right? And the merchant can actually, has a large role in choosing what these systems are. In fact, they can become their own systems if they like. There's no reason why a merchant themselves can't fill some of these roles and kind of keep it in-house. So there's a lot of flexibility about who can do what. It's not mandated in the spec. It's also not mandated in a regulatory fashion. So this may change in the future, but the specification itself, it's not law. It's not regulatory compliance. You also don't see a liability shift like you do in 3D secure transactions. Again, that's the ecosystem today. All of that is subject to change, and it probably will at some point in time, but that's all speculation at this point. And what we definitely don't want to do is rip out and replace the existing payment system infrastructure, right? This is supplementary. This is not rip and replace. So again, once an SRC checkout is complete, the merchant gets the payload back, and then the issuer does what the issuer has always done, right? They're going to receive authorization requests. They're going to perform their risk management and authorization. They're going to provide the authorization responses back to the payment networks. So none of that is going to change in SRC. So if we look at, it's kind of how we got here. Intersect did a survey last year, in 2018, just to kind of see where the e-commerce landscape is going and where it's projected to go over the next 5 years. And what we found out was we're basically looking at about a 91% increase in total sales volumes of e-commerce globally over the next 5 years from 2018 to 2023. And that is definitely not an insignificant amount of money. So what comes along with that territory, though, is, of course, fraud. So I think we all know the EMV chip and PIN story. Card present fraud is at historic lows, and the fraudsters are going to go where the fence is shorter, where the grass is greener, right? And that has manifested itself into card not present fraud. So some significant losses there over the next 5 years are projected. To compound that, we're also spending about $9.3 billion on fraud prevention and detection systems by 2022. So it eats a little bit more away. But the real significance is this $200 billion in lost sales due to friction at checkout. And that was in 2014, right? So as these systems evolve, that's definitely something that we're going to have to solve for, so that $200 billion worth of goods and services aren't abandoned in the checkout process. And that's kind of exactly the problems that we're trying to solve here in SRC, or EMVCo is trying to solve. So eliminating or entirely just reducing to an acceptable level the consumer friction during the checkout. So you're not going to get those high amounts of abandoned transactions because the consumers are either confused, they don't trust it, it's not a consistent experience, there's too much friction, and they give up on it, right? And the idea is to do that by leveraging a lot of data throughout the system. So federated identity data, authentication data, assurance data. And the idea here is that all of the systems in SRC should know what happened. I'll explain a little bit more exactly what I mean as we get into the individual components, but this data is shared among the systems. So how is someone authenticated? What level of assurance do you have? What kind of historical information is available for that consumer, right? Because we're talking about consumers here and consumer authentication. The other thing we're going to do, of course, is try to reduce fraud. Again, the more information that you have about a particular transaction, the better informed decision you can make. And you can, indeed, start saving a little bit of money on those fraud prevention systems, because you don't necessarily need to maintain as many disparate systems and have kind of proprietary systems if you can share that information and use that to make your own decisions. Talking a little bit about the ecosystem and the participants, this is where the fun begins. So first and foremost, we have the digital payment application. You'll see this sometimes described as digital shopping application, DPA, DSA. DPA is the official verbiage. This is, for all intents and purposes, the merchant or some merchant-like entity. So this is where the SRC process begins, and this is where the SRC process concludes. So it's an SRC checkout. There's goods in a cart, for example, and the consumer needs to purchase those goods. They initiate an SRC checkout. This is really the only part where the consumer has direct interface to SRC. Now, they might get prompted for authentication through other channels, but this is the bulk of where the interaction is going to take place. So even though the merchant may not know what payment cards are available to the SRC systems, it's still going to have to display that to the consumer either on the checkout page or in-app, wherever the consumer is transacting and making their purchase. Again, this can be built with the API calls exclusively, or you can use the SRC SDK as a merchant to enable your SRC checkout. Sort of on the other end of the spectrum, we have the SRC system. Now, the SRC system is kind of the brains of the operation. The SRC system is the orchestration layer, if you will. It's going to orchestrate all the activities among the various participants in the system. It's going to maintain those interactions among them. So it's going to be responsible for things like enrollment. It's going to be ultimately responsible for onboarding and checkout because it's orchestrating all of these activities. Now, when you look at who this would be, I mean, merchant's relatively easy. The merchant's the merchant. The SRC system, in my opinion, is probably going to have to be one of the card associations or all of the card associations. It's going to have to be run by Visa. It's going to have to be run by MasterCard because I think they're just in the best position to facilitate that sort of thing, right? They've already got a lot of systems going that have consumer information that are interoperable in the payment systems. They are the payment network. So just my opinion, but I think when this shakes out and it starts to get implemented, the SRC systems are going to have to be the cards. So this then begs the question, well, how does the merchant interact with that SRC system? That's where the SRC initiator or the SRCI comes into play. Now, again, this is just going to be my guess on how this will shake out. I think the payment service provider, the PSP, is probably best suited to be an SRCI. And again, none of this is set in stone. It's not required, but the SRCI, or the PSP rather, they already have a network of relationships. They have a network of merchants. They have a network of payments options that are available to those merchants. And so they would have, you know, a new relationship established with an SRC system for their merchant network, right? It's a new service that they're going to offer as part of their offerings. So the SRCI is really the middle layer between the merchant and the SRC systems. And it's going to aggregate multiple SRC systems together to bring back a lot of information in a single user interface. And namely, what that information is going to be cards. So when we talk about card selection, the SRCI is responsible for aggregating that information together and, you know, presenting them to the card or the consumer to choose which one that they might want to do. Now,
And
again,
Steve, do you mean something like?
To be the PSP,
you think it's something like a wallet? Steve,
sorry,
is this under like the consideration of something like a wallet or some kind of experience like that we're thinking we might be more used to?
So the SRCI is not the wallet function. It is the aggregator.
Okay.
Yeah, there are other systems that I need to talk to, but it's going to be able to pull that information in.
Okay. I was thinking about, you mentioned the interface for the consumer to choose, or the shopper to choose the card.
Yes. So I'll talk a little bit more about that in a second.
Perfect.
And yeah.
You know, anything could be the browser itself, depending on what sort of standards get rolled out and how this shakes out. But just as an example, I think the initiator is going to probably be the PSP in the foreseeable future. Now, the SRCI is the aggregator, right? It's kind of acting as a middle interface here. The actual payment credentials are going to be stored in a digital card facilitator, or DCF. You can think of this as essentially a wallet. So today, some of these systems exist. They aren't DCFs, but they serve similar functions. So you think of something like a Visa checkout could be a potential DCF. And what these are going to do is they're going to provide access to the digital cards within the SRC systems. Remember, the SRCI is just the aggregator. But it also plays a very important role in verifying who the consumer is and making sure that the information inside of the wallet is correct. So this is going to give you information like a somewhat redacted PAN, expiration dates, potentially things like billing address, shipping address. Are these correct? And then maybe having some ability to make changes to those if required, right? So the idea is there's going to be multiple DCFs, multiple SRC systems, and the SRC initiator can kind of break out to these individuals and figure out, what cards are available and be able to present those through the DPA to the consumer for selection. Last but not least, we have our good old SRC participating issuer. It is the SRC PI, and this is the issuing bank. And the issuing bank is going to be responsible for, making their payment cards available to be inside of wallets. So the payment cards are probably going to be inside one or multiple DCFs or wallets. And again, since we're not talking about authorization, we're not talking about payments, they're really facilitating the exchange of information in SRC, the information that they have. And I'll talk a little bit more about that when we get into identities and authentication. Now, there's one more thing that's important that we haven't directly addressed, and that is the SRC profile. Now, the SRC profile is not a participant in and of itself. However, it is stored inside of the SRC system, and it's a very important part of the puzzle. The SRC profile is really a collection of relationships inside the system that would contain things like digital cards, consumer identities, device identities, and the associated digital card facilitators, the DCF. Now, access to that profile is something that is fairly sensitive, right? Because in order to access a profile, there has to be some material identification process that happens before there is access. And in the SRC world, this is something known as recognition. That's where the various parties can work together to provide authentication and assurance data so that the SRCI can say, this is my consumer, Mr. SRC system, do you know them? And by the way, here's the assurance data that I have. Can I get access to the available payment credentials, please? Which of course correspond to a DCF that's associated. So all those mappings about identities and cards and DCF, it all resides in the SRC profile. So that's a very important part of the system. You don't see it here because it's not a participant, but know that it is in the SRC system. So let's think a little bit about what this would look like in real life. If I initiate SRC checkout, who is talking to who and what does that look like? So the first thing, of course, is there needs to be a checkout experience initiated. There's a consumer somewhere that wants to purchase goods or services, or it's in a digital card somewhere. The DPA, the merchant, will then interface with the SRCI, which in my view is probably going to be the payment service provider, to get back a list of available payment cards to display as part of the card selection process. Once that happens, the SRC needs to figure out what SRC systems are available, or sorry, concurrently, before it can present those cards, it needs to figure out what SRC systems are available to this merchant. And as part of that, it's also going to be able to figure out what DCFs are available. The SRC system can figure that out because the SRC system has a profile where it knows which cards are in which DCF. So this SRCI is acting as the sort of translation layer, the middle layer between the merchant and the SRC system, where the SRC profiles reside, and all kind of the juicy information that is going to be useful for the transaction is residing. The issuer can be involved in this process. They're going to be able to provide, again, additional data elements and information. They know kind of where their cards have been added to wallets. But interestingly enough, they can also provide some sort of additional authentication information. So while we talk about 3D Secure, we typically talk about 3D Secure in terms of payments authentication. But remember, 3D Secure 2 allows you to use that for non-payment authentication. So even though we're not submitting a payment at this point in time, we might be able to use 3D Secure 2 to still make some sort of authentication claims, get some data back into the SRC system so that we can make informed decisions and get access to consumer information without providing a lot of friction. And of course, if it's fraudulent, being able to detect that. And again, the last step is the actual conclusion of the SRC checkout, and where the merchant gets the payload back that contains all of the SRC information, as well as presumably a PAN or a tokenized PAN, so that they can then submit to payment. Now, orchestrating all that information is indeed a challenge, and if we deep dive into this a little bit, there are a few different types of identities here, and indeed there's different types of applications that can be used for, and there's also different types of authentication that come with each one of these. And I think a lot of people have questions around who owns these identities? How does that work? Because SRC, I mean, obviously is a decentralized system. We're sharing data. There is an SRC profile that sort of contains some of the necessary correlation, but it's not really the centralized authority on who is who. So how does that work? Let's distinguish these, right? So a cardholder and a consumer, at first they might seem like they are the same thing, but really they're a little bit different. And EMVCo does make a distinction here. So in their world, a cardholder is an entity that has a relationship with an issuer, an issuing bank. And that's one relationship, that's one identity. It's a totally separate relationship from the consumer, who is an entity who has a relationship with a merchant. And traditionally, those two worlds have sort of lived very separate lives, right? 3D Secure 2 kind of gives a little bit of additional data elements that can be processed about the consumer, some more information about the consumer. But at the end of the day, it's still cardholder verification and identity. This brings it to view a new sort of identity, a device identity. And that's a critical component of this, because we really need to look at how do we bind and correlate a consumer identity with a device identity. Because think about the recognition process, where I'm going to present as a merchant a list of payment options and checkout. I really need to have a high level of assurance that I'm presenting those payment options to a legitimate user. And not only a legitimate user, it needs to be the correct legitimate user. So if there's multiple users on a device, we need to be able to figure out and distinguish which one is which. So there's a lot of intricacies here. Device binding is a very important part of this whole system. And then the last identity is a little more cut and dry, and that is the card. This is the actual account at the issuing bank. So the issuing bank can validate it's a legitimate payment account. And there's also things like CVV involved on the back of your card or the front, you got Amex. But those are essentially the identities. But who owns these, and how do they get authenticated? That's kind of where we figure this out. So the card is fairly straightforward. The issuer knows the card number, they can validate it, they can validate the CVV. The consumer is a little bit trickier though, because this can come into a few different categories. So the first, and I think the most obvious, is the DPA, which is the merchant. They own an identity on the consumer, presumably because that consumer has a relationship with them that's pre-existing. Now this could be an account, let's say Canadian Tire, that's existed for however many years. But it could also be a checkout that's maybe a guest checkout. But that doesn't necessarily mean that the merchant doesn't have some information about that consumer, right? There may be some device cookies involved. There might be some tracking of what they've looked at in the past. There's pieces of attributes that you can glean even from a guest checkout IP address and geolocation that, you know, this is some sort of attestation to who this person may or may not be that can be combined with other authentication and identity information throughout the SRC network to make better decisions. The DCF, or in this case, I'm going to call it the wallet, can also have a relationship with the consumer. After all, the consumer has somehow or another onboarded their payment card into a DCF. And they might have a hook into that consumer's mobile device, perhaps. If it's a wallet, maybe it's Apple Pay has something to do here, and Apple Pay is the ability to, again, bring back correlating data. Is this the correct device associated with the consumer that they're checking out on? If it's an in-app purchase, can we validate that? Where is the device at physically? It might even be a push authentication that says, hey, are you checking out right here? But that relationship is established, and the DCF and the DPA have the ability to communicate directly with their consumers. This is where you can use technology like biometrics. You could use technologies like FIDO for authenticating your consumers. And that's information that needs to be passed along the value chain in SRC terms to the other participants, right? This also will have mechanisms for a step up of some sort. So that could be a one-time passcode. Hey, did you really just make this purchase? Or if this, I see that this consumer profile has got a device associated with it, but wait a minute, there's another consumer profile that's associated with that same device. Give me some unique knowledge factors or credentials so I know that you are who you say you are. And that's why device binding is incredibly important in the system. So I think you'll start to really see a lot of one-to-one device relationships. I mean, the proliferation of smartphones and personal computers, I don't think I need to elaborate on how that's just a fact of everyday life, right? Most people have their own dedicated device. Now, there are some circumstances where you have to cater for shared devices, public devices, maybe they're employer-owned devices. It just depends a little bit, but by and large, there's a definite need to do a one-to-one binding of a consumer to a device. And again, this is going to expedite the process of identifying the consumer and doing some passive authentication to get them a list of cards so they can continue their transaction in a checkout experience. And this also can take a few different forms. So device ID is one of them. There's things like CDCVM that can be used, but at the end of the day, there must be a relationship, must be a binding between the consumer and the device in order for this to work. So there's a consent piece that's involved in this as well. I mean, when you look at things like GDPR and CCPA, you can't just go out and say, oh, that's the consumer's device and I'm going to store this information, right? We're kind of living in a post do whatever we want to with consumer information world in terms of privacy and cookies and device identifiers. So you do need some mechanism in here during the binding process that the consumer is going to consent to have this be sort of like their trusted device. I'm going to check out on this device, it's my trusted device. And that's going to enable us to lower the friction during the checkout process for them on their go-to device. Last but certainly not least, there is definitely an area here for the cardholder authentication part of the house. And the cardholder is the entity that has a relationship with the issuer. But that issuer might also have a wallet. They might also be a DCF. Remember, none of these roles are clearly defined into who is going to fill them. Right? So you can slice this up a few different ways. The way I see it, issuers are probably going to want to play in the market for wallets and DCFs, because if they have to get their cards into a wallet, well, it may as well be them that puts them there in the first place. It kind of takes some of the friction out, make it a little bit easier for all the parties involved. So when you do that, again, you can use things like 3D Secure 2 to do non-payment authentication. You can use 3D Secure 2's risk-based authentication systems to look at some of the information that has been passed through SRC, analyze that for risk, and then return that information to the merchants so that they can make an informed decision when they actually go to submit their payment. Now, a note on that, again, 3DS, SRC are not mutually exclusive. In fact, they work rather well together because by the time the merchant gets the payload back, they haven't decided how they're going to submit it. And if the merchant does decide to submit it as a 3D secure transaction, well, SRC has done a lot of the legwork for them already to figure out what data elements and information they need to submit in that 3D secure transaction. So I think it really is a great way for issuers to kind of repurpose and get more value out of the 3D secure systems that they already have. So even maybe if the merchant doesn't submit it on the 3D secure transaction, it can at least help them prepare that transaction if they do. It can also provide the merchant value to say, okay, this is a legitimate user. I'm not going to put my user through 3D Secure 2 or 1 if 2 is not available. Now, this ecosystem also brings together parties that allow for, sort of fallback scenarios or different non-standard authentication routes. And what I mean by that is, for some reason, 3D Secure isn't available to, maybe the issuer just doesn't have it, then there's still other means that a merchant can go through and the data and assurance they can get that it's not a fraudulent transaction and still be able to reduce the amount of friction that they put into the checkout experience, even if some things that are traditional in 3D Secure just aren't available because the issuer doesn't support it. So when you look at some core technologies here, I think the most important ones are listed here. So device authentication, device binding, very important part of SRC. And that's, I think, the number one factor to getting a frictionless checkout experience is a very strong familiarity signal. Hey, I know you, right? And then you can couple that with the merchant side of the house where not only do I know your account, I also know your device, and I have a strong correlation between the two. It's a very passive system. It's kind of you can get passive challenge response data out of that. Depending on how you implement your device ID, you might be able to have some sort of keys, or public keys, private key pairs issued so that when you do look at device IDs, you're able to sort of even sign that information so people aren't able to replay IDs and kind of spoof devices, right? So there's a lot of technology that needs to go into making sure that the device is the device that it purports to be. But once you solve that problem, I think it's a great system to get consumers in and out of checkout very quickly and frictionlessly. Barring that, there still does need to be some fallback option for consumer authentication. Again, in the event of a shared device, you need to identify concretely which one of the legitimate users of that device is transacting, right? That's typically going to happen through some sort of knowledge factor challenge, but you're going to have to challenge the user at that point, unless the other user of that device just deregisters or goes away. And then we talked about 3D Secure a lot, but this is, I think, a great scheme, not just on the payment side, but again, before it even hits the payments part, when you're gathering authentication data and user data, those systems can be leveraged to do that in a way that might not be frictionful at all for the consumer. Again, you can use the risk-based authentication engines built into 3D Secure 2 so that you're just providing a lot of assurance data and you're not necessarily challenging the customer. So I've talked a lot about hypotheticals and kind of how this could look in the real world, but if you look at the actual end user experience and the impact, it's a little more well-defined. So if I look at sort of the SRC standard checkout, there's going to be a merchant. The merchant's going to have a checkout page, and there's going to be some mechanism for the consumer to identify that they're going through an SRC checkout. That's usually through an SRC symbol or an SRC mark, as they call it in EMVCo language. But the idea here is to kind of reinforce to the user that you're going to be able to access all of your wallets if you go through this SRC checkout process. And it's going to be a consistent process. There's going to be no surprises. It happens the same way every time. Now, it might be branded differently. Again, the UI might be a little bit different, but the UX is going to be generally always the same. So after it goes out, the merchant goes out, talks to SRCI. SRCI aggregates all of the available card that can be used. The card selection process happens, Once you do select that card, then the DCF gets involved with actually presenting the card information, accessing attributes specific to that card and that customer, right? So name, shipping address, billing address, phone number, being able to confirm all that information and display it back to the user, and and maybe let them make changes if they so need. That, once you hit continue, if everything lined up, if there was no strange anomalous behavior, if everybody looked good, the assurance level is very high, then your payment is just complete. You're done. The merchant submits that on whichever rail they choose, and the payment's complete. Here are your goods. Thanks for being a books.com subscriber. That can, of course, can flow a little bit differently, but let's take a look at something where maybe there is no card selection at all because I'm a routine books.com user. I'm going to use books.com as an example. And I have pre-selected, this is the default payment card that I want to use. So in that case, you may not get that selection popping up at all, but we still need to be able to do some validation of the user. Maybe my account is kind of new and my assurance levels are low. So I choose I want to pay with a card. This is where a DCF can come into play and interact with the user to get authentication information. So in this role, EDT Bank on the mobile is acting as a DCF. They have a relationship with the consumer. They have their wallet installed on their mobile app. And as part of this whole process, they say, hey, are you making this transaction? And you say, yes. Okay, here's the account number. Here's the name and the address. Everything looks good. You can approve it. And of course, on mobile, you can ask for things like biometrics to approve. You can ask for knowledge factors. And you get a strong possession factor out of the gate because that's the device that's been bound to that consumer. So once you get all the information back, again, the merchant gets the SRC payload that has the PAN that is in the DCF or the tokenized PAN that's in the DCF, and then they go and submit their transaction however they seem fit. So to wrap everything up here, the key takeaways I want for today is EMVCo is a standard for card not present, but it is very different from 3D Secure, right? We're talking about consumer authentication versus cardholder authentication. And I hope you understand how those two kind of can work together. But without ever invoking a 3D Secure payment transaction, 3D Secure can be used in SRC to get authentication and identity attributes and data. SRC, it's all about a checkout experience, right? It's about a unified checkout experience across multiple merchants having access to all of my wallets with all of my cards as a consumer, and then giving the merchant back all the data that they need to make an informed decision about the payment. And of course, this dynamic data is shared between all the SRC participants in a standardized format. So a specification wouldn't be a specification if it didn't list out exactly how these things are supposed to be structured. So they go through great length of how that's supposed to look, but the point of this is it's standardized and it's consistent. That's the whole point. When you do those things, you can reduce your fraud because, again, you get higher assurance levels that you're dealing with the right person or not, and you can decline the transaction. Your fraud prevention costs should go down because you don't have to maintain as many fraud prevention systems. You're getting the data from a standardized consortium. You get an improved customer experience, which should relate directly to reduced cart abandonment and improved revenue through e-com because the transactions are actually being completed. You don't have to worry about scaring customers off if you're a new merchant because your site looks kind of dodgy, right? If it's SRC, it's SRC, it's SRC. The consumer can trust that experience. And while it is a decentralized system and no one party particularly owns the identity, everyone has shared access to this data. So it's not on an on-demand basis. I can't go, hey, tell me what happened on December 13th. No, it's all transactional, right? So as the transaction moves through the SRC system, the information is compiled and it's added into the transaction data, the dynamic data. And again, it's returned to the merchant at the end. So the merchant is the beginning and the end of SRC with the consumer in mind. And last but not least, this is brand new technology. I mean, the 1.0 specification was published in June of this year. So it is going to take a lot of time for the industry to suss out exactly how this is going to work, right? Who's going to play what roles, what the incentives and the adoption rates are going to be like. That's all to be determined. So we are in the very, very early stages of SRC. But I hope, if nothing else today, you can see kind of where it fits, how it helps digital identities be trusted and shared with higher levels of assurance when the participating parties standardize their information exchanges and provide their insights to one another.
So I think with that, I want to pause here and go to some Q&A.
So a couple of questions I thought was really interesting. First of all, thanks very much, Steve. One of the things I thought was interesting was the suggestion that the issuers would take a larger role in helping place credentials. And that seems to me to be an interesting extension of the Visa tagline, it's everywhere you want to be. Because, I mean, if they're going to be helping me put a credential either into my fridge or, you know, taking a version, you know, into something, a wallet that manages my fridge, it's an interesting kind of decision to be made. But I want to leave that for a second. There was a question sent in through the chat that said, how will an SRC initiator know, and in quotes, where to route a request and you know, to the appropriate SRC system?
Sure. So the SRC initiator, it has to onboard into each individual SRC system. And there are going to be multiple SRC systems. I don't think there's any way around that at this point. Once that SRCI is onboarded into an SRC system, then it has access to all of the available cards that SRC system has enrolled. So the SRC profile is going to have the DCF information, it's going to have the consumer information, and it's all going to be available for the SRCI to aggregate. So its job is—
rules-based system will exist then.
I think it kind of has to. In terms of the actual spec, I don't think they go into detail on, you know, how to make that happen. They're just mostly interested in the interoperability and how to get access to the data and be able to display it and interact with it.
So one of the questions that I had was, you know, when I look at the list of things that have to happen, first of all, it was a little overwhelming. Not quite as simple as I was hoping we were going to be able to talk about, but it seems there's a lot of moving pieces and a lot of players. So it's going to have to be at a collaborative approach. You know, very much like EMV chip and pin, right? This is going to be collaborative ecosystem play, or not kind of a one supplier supply everything, right?
I think it could go either way. If you really want to kickstart the process, I think some of the, especially the card networks, are going to have to provide some of these systems kind of out of the box. Maybe not something that you have to take, but at least get the ball rolling, right? So yeah. They're in a position where they need to either carrot or stick the industry into adopting this technology. And I do think the cost savings and $200 billion worth of abandoned carts, if we can get that, even just a half, that in itself is going to kind of pay for the heartache or the heartburn. But there needs to be some central party, I think, to kickstart it before then you'll get kind of the network and knock-on effect of the smaller vendors that are being able to rise up to the top and be technology players to provide roles. So there is choice in the market. You know,
I would, you know, just, it's an interesting question, that $200 billion of abandoned carts. I think there's a difference between an abandoned cart and an abandoned customer, which is that, you know, people abandon carts all the time, but then they often come back and purchase again later. So whether or not that customer ended up, the transaction never ended up taking place is I don't know the source of the number, but it sounds to me as being potentially exaggerated by that factor. But what I think is really interesting is the potential to decrease the risk and therefore the cost of doing these transactions, because, you know, right now these transactions are too expensive to do because the risk is too high associated with it, and therefore, you know, it's just not economical to do a $1 you know, ebook transaction this way. But if we can decrease the risk you know, significantly, then we can start introducing micropayments a lot faster.
Sure. I mean, again, it's all about sharing that assurance data and kind of what does each participant know about the consumer throughout the checkout journey. And again, traditionally those systems, they live in silos, they don't really talk to one another. Being able to exchange that data, to your point, should lower costs throughout the entire payments ecosystem, because now I've got way more information to make actionable decisions on. And I've got the ability to kind of phase out maybe some systems that I didn't need. And I think it's a win-win for the consumers and the merchants.
Yeah, very interesting. So who do you think is going to be responsible for driving the change? And if it's the issuers, which it sounds like you're thinking it might be, you know, who at the issuers organizations are going to be making the decision to implement SRC?
Yeah, that's a really good question. I think that's kind of one of the big ones that are out there in the market right now. It's okay. So issuers obviously are going to have a role to play in this. What's it gonna be? How's it going to be defined? I think they, I kind of speculated earlier that they might be interested in having their own issuer wallets and their own DCFs, which would kind of make sense. It eases maybe the burden of enrolling a card into a wallet. Hey, I'm an issuer. I have a wallet, and by the way, I just provisioned your payment card directly into it. Go forth. Feel free to use this wallet. Everything's already in there. Thank you. Have a nice day. Right. So, yeah. How deeply they want to get involved in it, it's kind of subject to debate. We're probably going to see some sort of shift in when it comes to mobile banking and putting in new features and how those all work together, because I think your mobile device is going to be critical. I don't know, maybe probably too long about device binding. But when you get those systems that all kind of can share the data and share it easily, especially if one player might even serve two functions, I think it makes the whole experience better.
Yeah, absolutely. Okay, so listen, we're at the top of the hour, and I think we could talk about this for a few more hours, definitely. So unfortunately, we're tapped out. Your contact information we've got here, and it'll go out to everyone that has been on here. So perfect, we got it on there. Thank you all for joining us today, and thank you, Steve, for taking us through this really quick intro to SRC. We're really pleased to take these conversations offline at our events. We've got the upcoming event in Ottawa in another week, and then the IdentityNORTH Eastern Workshop in Halifax on October 2nd and 3rd. This is, those events are a mixture of keynotes and panel presentations, case studies, and demos. And it's great to have subject matter experts like Steve come out to explore some of these big questions and ideas that are shaping our digital economy today. So I want to encourage everyone to visit the website at identitynorth.ca for tickets. And I want to invite everyone to have a great rest of your week, and hopefully we'll see you in Halifax next month. Thanks very much, everyone. Talk to you soon.